very good evening for everyone who have joined in. I'm Ankit Kanodia from Smart Sync Services, a SEBI registered investment advisory firm. Welcome to yet another episode of Mission Smile guest webinars, a new Mission Smile initiative where we invite guests from the industry every month and learn from their unique investing styles.
And there's SaaS. SaaS is software as a service, which is like a whole kind of separate, huge thing.
Right.
SaaS was this little company that was in I think it's in South Carolina or something in the United States, and they just create a programming language. So just to make sure, I don't think there's many SAS companies around.
Right, right.
I think it's a very rare thing. I think SaaS is kind of considered a dying language at this point, but it has a place in my heart. It's my first programming language. So
Great. So quickly, I'll start with the first question, Nick. So tell us about your early days as a writer on investing and personal finance. What made you believe that this is where you belong? Any specific incident or person that influenced you to take this plunge?
To be honest with you, the first 11 months were really tough. I mean, I had moments where I put out a post and it would do well, and then I'd 8 or 10 posts in a row that didn't do well, or I didn't really get much accolades, or people didn't really respond much. Imagine people think when you put out work that people don't like, that it's like, oh, you're gonna get a lot of haters and people saying, oh, you're terrible. And that's not what it is. When you put out something that's not good or people don't like it, they just don't say anything. It's quiet. It's silence. You don't hear anything, right? And so in between those once in a while posts that were good, I just had a bunch of silence. And I think the moment for me when I kind of felt accepted and everything was I came out to New York City. I was living in Boston at the time. And so I came out to New York City, and there was a conference where there was a bunch of, people in financial Twitter out here, Michael Batnick, Morgan Housel, et cetera. And the day I met Morgan Housel in person, I was like, because remember, I look up to this person. He's like my favorite writer in finance, et cetera. And I met him, and he was like, man, your writing is amazing. Like, you've blown me away in the last, year, basically. And I was like, what? For me, that's especially now, remember, this is before he had the book, before his brand's just gone up and up and up. But even back then, I thought he was a superstar, writer. And so for him to say that to me, it just meant so much. And I think that was the moment when I was like, I can do this. I've been, when you have someone who's that good telling you they admire your work, I think it does a lot for you. And so I'm forever grateful to Morgan. He's been a mentor. He's kind of, as I said in the book, I have the acknowledgement sections. He just leads by example in a way that I've never seen anyone else do. And so I'll always be forever grateful to Morgan. So
Vishal Khandelwal of Safal Niveshak, you made a very interesting comment that people remember your victories and forget your losses. You said that in respect of one of your, I think your blog posts, if I remember correctly. So when I heard that, a bulb flashed, as in, wow, what a comment. And I never looked at life in that way. So I would really request you to expand on the same for the benefit of all. What do you mean by that?
Basically, if I were to ask my biggest fans, my readers, oh, what are your favorite posts? They could probably name maybe one or two. Maybe the biggest fan could name 5 at most. I can't even. It's hard for me to remember all my post names. So I'm like, remember this post? Oh, I kind of remember. I've written 300 of them. It's hard to remember all of them. I'm once I start reading, I'm like, oh yeah, I remember writing this. But it's it's one of those things where people only remember your best work or the work that they think spoke to them, right? For example, I've written a post on alcohol that spoke to a lot of people. I wrote a post on, regrets that spoke to a lot of people. I've written a post on even God couldn't beat dollar cost averaging, right? That's a post that spoke to a lot of people. So everyone's going to pick and choose what they like of your work. And no one's going to remember, if I said, okay, what's your least favorite blog post? I don't remember it. No one remembers that, right? And they're okay with you're not going to hit a home run every time, and they understand that. Every single content creator out there, there are people out there that once in a while have a dud, and it's okay. There's nothing wrong with that. Everyone does it. I can tell you, Morgan will probably tell you, yeah, this piece wasn't as good as my other stuff. Every single person that's a great writer, Jason Zweig will tell you that. Everyone will tell you that. You're not going to always write home runs and write your greatest stuff, and that's okay. And there's nothing wrong with that, right? Sometimes we think an idea is cool and we really enjoy it and it's good for us, and other people can really like it, but it doesn't mean it's going to get popular, right? So I think it's just keeping that in mind when you're kind of creating content or anything like that, that it's okay if you're not always batting, 1,000, as they say. That's the baseball analogy here in the US. One other thing I wanted to say on what you just said about the Infosys thing, I think it's really interesting you bring up that point, because a lot of times we talk about, oh, we could have bought here and then 8 years later we have no return. Nobody invests like that. It's very rare that you put all your money in once and stop. Of course, there are exceptions to that. Let's say you sold a business and you have a big lump sum you put all in. There are exceptions to that. But for the most part, most people are buying over time. And the reason why we don't look at that over time analysis is because it's much harder to run. It's very easy to calculate a period return. Like, here's the starting number, here's the ending number. Final over initial minus 1 equals your return, right? Very simple. And so in the case of Infosys, the final number in '08 over the initial number minus 1 is 0. It's 0% return, right? But for you to calculate the dollar cost averaging return, you have to calculate every single one of those changes from the end to those beginning points and then average them out over the purchases and weight them if you have different dollar amounts. After doing all that, that's very complex. You need a computer to do that. You need to do an Excel file or something. And because it's so complex, no one does it, or very few people do it. And so it's much harder for us to visualize that or understand it. So I think that's one thing to keep in mind is most people don't invest in snapshots. So, and that's, I even show in the book, like everyone talks about Japan. I was like, if you had started buying into the Japanese stock market starting in 1980 and you kind of did that for the next 30 or 40 years or whatever it was I did in the book, you would still come out ahead after. I mean, of course, it wasn't a great return. I'm not going to lie. You didn't make a lot of money, but you still beat your cost basis, right? And so it says, at times you're above, at times you're below your cost basis. So you're kind of moving around that. But even this is one of the worst stock markets in history, and you still would have done okay if you had bought over time. I love that argument that you made because you're right. If you're passionate about something, I'm not telling you to not be passionate. I don't want to make you like, oh, you shouldn't like this. Like, that's not what I was doing. I'm trying to get the people that are on the fence that are like, oh, should I buy it? Like, they don't know anything. That's who I'm trying to talk to. The people that don't know much. It's like, oh, should I do individual stocks? Should I not do that? I'm trying to get them like, just do this. It's much easier, right? But the people that are passionate, they're looking through 10Ks, they're doing this, they're on calls, this. If you're into that and you love that feeling, you love being a shareholder, this community, you love that, I can't take that away from you. I don't want to take that away from you, right? So in that case, do your thing, enjoy it, right? Enjoy life. You only get one life to live, so I would never try and stop someone from doing something that they enjoy. So maybe I should have prefaced that in there. I should have talked more about the fun part, but I was just trying to get those people that are on the fence that are kind of like, maybe I should do this. I'm trying to get them like, don't waste your time, move forward. There's going to be a whole set of people that they love this thing, and no matter what I say, it's not going to matter. And so actually I actually don't need to say that in the book, because if you truly love it enough, no matter what I tell you, you should still be in, right? If I convince you to stop buying individual stocks, you probably didn't love it enough. So I actually think what I did actually makes sense now, because, if you're, as you said, you read it 3 times and I still couldn't convince you, you probably love this stuff. So cheers to you.
Thank you so much.